Hey, WCI traders and investors, Matt Buckley, the Chief Investment Strategist here at Wealth Creation Investing. Hope you had a great Memorial Day, and hopefully you remembered the reason for Memorial Day. Just want to thank the men and women who are out there on the tip of the spear who have given the ultimate sacrifice so that you and I can be free to enjoy our liberties and our family and some gave all so that we can live free. So hopefully you had a good Memorial Day weekend, and it's going to be a short trading week. Obviously, last week a lot happened with the Facebook flop, the Greece fiasco. Is it going to exit the eurozone or not? J.P. Morgan still getting hammered with losses, and over the weekend, more importantly. Bankia, or actually Spain's largest bank, just got bailed out. So, they're having a 2007, 2008 over in Spain and overseas, and it's just going to be absolutely ugly, folks. But of course, when you look at the media, or the financial media, Greece hopes buoy futures. Obviously, the markets are closed today for Memorial Day, but the recent stock index futures that are trading up right now is because the party, a pro-austerity party, top polls ahead of June elections. So they already voted the grown-ups out. Now they're rethinking it, and maybe, folks, short story long, Greece is going to be an absolute train wreck. It's either going to have a disorderly exit from the euro or an orderly exit, whatever that means. Maybe they'll end up paying 50 cents on a dollar for some of their debt. So absolute train wreck still. So what's that mean for us? Well, as investors, let's take a look at the CBOE Market Volatility Index, the VIX, the VIX. As we can see, after we lost our credit rating and everybody thought the world was going to end, volatility became incredibly low priced, all the way down here to the low teens. And by now, WCI traders, when vol is cheap, you buy it. When it's expensive, you sell it. And vol bottomed out here. And then obviously with the past, bleeding that we had been seeing going on, I think volatility is going to remain elevated, right above the $20 level, or at the $18 level, excuse me, $18 to $20 level on volatility. Why? There's a lot going on this week, as a matter of fact. Obviously, markets are closed today, but Italy has bond auctions going on. I need to check out how those are going on. Tuesday, the S&P Case-Shiller home prices for March are reported. Consumer confidence for May, and the Chicago Fed numbers for April come up. And Thursday we have some retail chains reporting. I forgot on Wednesday, the NAR, National Association of Realtors, reports pending home sales. And Friday, jobs. We're going to be looking at a jobs number. And here's another big one I want you to pay attention to on Friday. China is post its PMI, its Purchasing Managers Index for April. We really need to see what's going on in China. Are they stepping on the accelerator? Are they slamming on the brakes? Or somewhere in between there? And also ISM, Institute for Supply Side Management, the manufacturing index for May is going to report it along with personal income on Friday. So it's a big week in store. Guess what happens tomorrow as well on Tuesday? Check out this Facebook, the Facebook flop. Yeah, I don't have 6 months of trading. How about 10 days? So Facebook options are going to start trading tomorrow. And talking to some heavies, some market makers, some buddy of mine, a lot of folks up in Chicago, it's an absolute train wreck. You think the IPO is a train wreck. They don't even know how to price the volatility. 110, and the implied volatility is 0, and the historical is 110.85. My advice to you is to stay away from Facebook options for a while. The bid-ask spreads are going to be absolutely ginormous tomorrow. They're going to be huge. And you know who makes money on ginormous bid-ask spreads? Oh, the market makers. And institutional mom and pop or retail mom and pops are going to get hammered if they try and even step into trading any Facebook options. So stay away from Facebook options. That's your buddy Uncle Wiz trying to help you out from breaking your wallet and your heart. So a big week ahead. Hopefully you joined us last last week for our full day of trading the Eurozone disaster, and hopefully took advantage of our 15-day free trial into our wealth creation with options service. It's a more conservative, longer dated type of option service that's geared more towards the investor as opposed to the trader. So looking forward to doing our first one of those this Wednesday after the close. If you can just click on this banner on our website, or you can go to wealthcreationoptions.com/WO, and you can sign up there as well. And it's a free trial. You'll get as it says here, you'll get a market. You'll trade live with me every Wednesday. You'll get a Friday video debrief on our current options positions. You'll get actionable trade ideas for your model portfolio weekly. It'll be based on a $50,000 model portfolio. We'll get a bonus webinar in every month. That's going to be on Monday, the third Monday of every month, the options expiration. And you also get access to about $400 of options education as well. So, folks, I got to start packing for a trip, heading out to the West Coast to meet with some investors. But otherwise, stay safe. Stay away from the Facebook options. If anything, just learn from them. But this week is a kind of a keep the powder dry week with all those reports going on and what's going on with Spain and Greece. This week's definitely a sit there on your hands type of week, at least for us at WCI. So happy hunting. Make sure you hedge, and I'll see you on the debrief.